Hey, what's up, guys? A number of Bitcoin millionaires continue to go up. In this video, we will analyze the data if you can still become a Bitcoin millionaire with 10 or even 1 BTC. This video is brought to you by iTrustCapital.com. Do you live in the United States? Are you tired of paying taxes on cryptocurrency trades? If so, iTrustCapital is the right platform for you. iTrustCapital is the leading digital assets IRA trading platform that allows clients to self-trade crypto and physical gold directly in real time through their retirement accounts. They are the first and only low-cost, turnkey, easy-to-use, 24/7 tax-free crypto IRA platform. iTrustCapital is the most trusted platform in the industry with 4.9 stars on Trustpilot. You have 3 ways to start an account. First, roll over 401k from a previous employer. Second, transfer any existing IRA from another financial institutions. Third, start a new IRA. To sign up is quickly and easy. Use the link in my bio, enter the promo code Aimstone to receive 1 month free. If you look at the Bitcoin market, 1 BTC is currently priced at around $9,000. It has been trending downwards for the past few days. In most cases, after such a dip, we might see a decent price explosion, and most likely, it will be upwards. This is what we have seen time after time after Bitcoin dips. So, can Bitcoin make you a millionaire? Well, Bitcoin has already made many investors millionaires, especially those who were early into cryptocurrency space. Since the current price of 1 Bitcoin is around $9,000, you would need 111 Bitcoins to officially become a Bitcoin millionaire today. Just recently, 43 new additional Bitcoin addresses joined the 100 plus BTC, and it makes over 15,000 Bitcoin addresses with at least 100 BTC. Well, do not get discouraged if you're not one of them. It's only 0.5% of all Bitcoin addresses. Let's say that you own 1 Bitcoin, and considering the fact that the current price of 1 BTC is $9,000, you would need a Bitcoin to increase by 111x from here to reach $1 million price target in order for you to become a Bitcoin millionaire. But let's say on the other hand, if you own 10 Bitcoins, then your pathway to become a Bitcoin millionaire is much smaller. If you own 10 BTC, you would need a price to increase by 11x or so, and it would increase the price of one single Bitcoin to $100,000 respectively. But is it even possible for Bitcoin to increase by 11x to 100x from here? Well, let's examine the facts. First, let's go all the way back till 2011, when Bitcoin was trading slightly under $1. And of course, back then Bitcoin was not known by many people, and to make a massive move in price was much easier comparing to the current time. One of the first times Bitcoin had a massive spike is when Bitcoin increased from $1 all the way up to $30 a coin. That's already 30x rate of return in just a matter of few months. And of course, after that, Bitcoin dropped until like $3 or so, and many crypto enthusiasts thought that Bitcoin was dead. But no, it was not the case. Second major move happened 2 years later in 2013. By that time, Bitcoin was able to recover from that massive $3 drop till slightly over $13 a coin. And a very similar chart pattern played out once again. Bitcoin skyrocketed from $13 a coin all the way up to $213 a coin. That's more than 16x rate of return in just a few months. But once again, Bitcoin suffered a massive drop and crashed to $60 a coin. Third, massive price increase happened in 2013. By that time, Bitcoin gained some positive momentum and increased till $100 or so. Soon after that, unexpectedly, Bitcoin went parabolic and once again informed that hockey stick chart pattern. Bitcoin was able to spike from $100 till over $1,200 a coin, and that's another 12x rate of return. Soon after that, it dropped again. In short term, Bitcoin dropped slightly over $500 a coin. but over long term, Bitcoin continued to decline. Fourth Bitcoin bull market run is the most recent and most memorable to many cryptocurrency enthusiasts, including me. It took place in 2017. In January 2017, Bitcoin was trading at around $1,000 a coin, and by the end of the year, Bitcoin skyrocketed all the way close to $20,000 a coin. That's a 20x rate of return with 1 year period. Many of us know what happened ever since. For the past 2 years, Bitcoin was not been able to break its all-time high, and that's okay, because Bitcoin is on the right trend line since it bottomed at around $3,000 back in early 2019. So, going back to the question, if you can still become a Bitcoin millionaire, I would say of course you can. Throughout the history, Bitcoin has made 30x, 16x, 12x, and even 20x in the market cycles. If you own 10 Bitcoins, then you can become a Bitcoin millionaire in just next bull market run. But if you own only 1 Bitcoin, you can still become a Bitcoin millionaire if your time horizon is longer than just 1 market cycle. Remember, you need 111x rate of returns to see Bitcoin at $1 million. If you would bought Bitcoin back in 2011 for $1 and hold it until now, that would be 9000x return on your investment. If you would have bought Bitcoin in early 2013 for $13 and hold it until now, that would be 700x return on your investment. And if you would bought Bitcoin in late 2013 for $100 and hold it until now, that would be 90x rate of return. So it's definitely possible to become Bitcoin millionaire with only 1 Bitcoin. You just need a longer time frame. Recently, I have seen a great video with Raoul Pal and Mike Novogratz where they explain what could be the next catalyst for the next Bitcoin market cycle. Let's take a look at this video.
When it breaks 10,000 or 10,200, it will get to 14,000 much faster than people expect. Yeah. So you consolidate in a range and listen, this is an adoption story. And if Bitcoin was easy to buy, it would be a lot higher. And so we've dealt with a few hedge funds that are buying it, right? They've got to go through all the due diligence for their funds. And you know, it's a 2 to 4 week process for their back office to feel comfortable. And so it's not like pick up the phone and call. Then they got to usually talk to their board. Hey, we're going to buy crypto for the first time. The other, I think, new group of buyers that are coming, they're not here yet. The financial advisor community is giant, right? If you think the bulk of the wealth in America and in Europe is not owned by Gen Z or millennials, though they'd like it. It's owned by, Gen X and baby boomers and older, and, the 50 to 80-year-olds. They don't have bread wallets or Coinbase wallets or Venmo apps, and so getting the financial advisors to feel comfortable to then sell it to them is a process at Galaxy that we're really working hard on. That's being amped up in a big way, not just with us, with others as well. And so I think in the next few months, you're going to see a lot of FAs putting their clients into this.
And also, Mike, as you know, is the structure of this is everyone's got their eye on it. And if the price moves up, everyone gets FOMO and has to get involved. And that's at institutional level now.
Yes.
So if it goes up further, the more it goes up, the more the market cap goes up, the more they can justify it to their trustees and the more people get involved. So I think we're at that tipping point of a virtuous cycle that can continue for a while, but we just need to get through these levels first. But I think essentially every institution, every RIA is almost kind of short the upside calls. Not really. I mean, obviously there's a bunch of people who are, but really what it's all about is people don't have it and they need to get it, but they wait for the price for confirmation. Right, we've never gone through such central bank uncertainty. None of us have lived through monetary printing of this kind of magnitude. In fact, none of us even believed it would ever happen. So when you've got something that is so large and it continues, I mean, it just doesn't go away. It gets worse and worse and worse. Everybody has to ask the question, well, what could it mean? And Bitcoin is the call option on the what could it mean? And it's as simple as that. So in a big portfolio, a very little bet can end up being a very big thing if something at the central bank level, i.e. fiat currency, come into a larger problem. The baby boomers got with the equity market and the bond market, they got the double and the property market, sorry, all three, they got a record low valuations gifted to them in their 30s. And they got rich on the back of it. And I think millennials are going to accumulate over time in their 401ks into crypto or think about saving because it gives them something that has the 50 to 1, 100 to 1 upside.
And Laura, if we were landing here 150 years from now, and we were anthropologists and historians, and we'd look at the baby boomers, and unfortunately, I'm 34 days a baby boomer, though I always tell my kids I identify as Gen Z. The baby boomer generation will look back as the most selfish generation in the history of the planet. If you look at what they have taken and the debt they're leaving versus what they put in, right? And so this is generational theft on a gargantuan scale, right? The baby boomers are running up a debt that's astronomical that my poor son and his kids are going to have to pay back one day, and they're not going to be able to pay it back. And so in some ways, logic would say the only way you pay it back is inflate the shit out of way of your deficit. If you just look at the scale of the debt and how fast it's growing, right? You've got a positive first and second derivative of the growth of debt. That doesn't make you feel good if you're 20 years old or 24 years old or 16 years old. Now, most of those guys don't have economics degrees yet, and they haven't actually figured out how to connect the dots, but they intuitively feel it. And so when I really think about it, like, we're going to come back as, these future anthropologists. You're like, dude, of course they were buying something else. And you're smart enough to know that the dollar's not going to be worth that much.
And key to the point is the millennial generation, and particularly Gen Z, grew up understanding that digital assets have value, right? Mike and I had to take that leap. We didn't know this. It didn't make sense to us, right? And we were still fighting for our vinyl records, and it was all going to Apple. All of this digital stuff was not a natural thing that we grew up with. What these guys grew up with is digital assets have value. So they don't have to take any leap of understanding at all. In fact, it's ludicrous to imagine that cash is an easier thing to have than a digital asset. So the adoption rate from younger people is always going to be faster in this. So I think just naturally they will gravitate towards it, and they'll just understand it intuitively. So if we're looking in that short term, i.e. what breaks 10,000, well, it's probably the shift towards more institutions coming into the space, because a few people can drive this massively. And as we said, once it starts going through, there's a few structural issues. Once it starts going through the upside, it actually quite probably accelerates. It's about, Bitcoin stands for a whole bunch of different things. And for me, it's a call option in the future of the whole financial architecture, the whole rise of the digital assets, the blockchain, tokenization, and all this stuff. And it is an option on that too. So we could be wrong, and we don't get to some, as Mike's saying, maybe we don't get to some sort of end game. But we do know that there is a massive progress to this other end game which is going on, which is a whole new architecture of how we operate digitally and digital store of value. So Bitcoin is that too. And that's what makes it incredibly attractive.
All right. Well, I appreciate that you guys went over, but I just want to ask one last piece because I mentioned it right at the beginning. So amidst everything that we've discussed, we also had this recent Bitcoin halving, and traditionally that has driven a boom in the price in the year or like roughly 18 months after halving. But because this isn't really a normal time, I just sort of wondered how you expected the halving to be or how you expected it to affect Bitcoin amidst everything else.
So I think it's just, again, both of us are storytellers. So you got two storytellers on the same podcast. When I think of the Bitcoin story, the halving is like a giant exclamation mark this year. Like, okay, the central banks are doing quantitative easing, and the central bank of Bitcoin, we're quantitative tightening, right? We just cut the supply, the new supply in half, and we'll do it again in 4 more years. And so it's such a symbolically cool time for it to have happened. It's a little bit like, take that, central banks. And I think that, to me, that was much more important than the technicals of minor selling. And
it's the lovely thing of saying quantitative easing versus quantitative tightening by algorithm. It's a great story Whether it at the margin makes all the difference or not, who the hell knows? I'm not smart enough to figure it all out. What I do know is it probably works, whether that's because of the story and the human behavior or the reality of the less supply and an increased demand.
I agreed that generations have a big part to play into the Bitcoin adoption, and it looks like a few years from now millennials will be the main driving force behind Bitcoin as they understand digital assets better than Generation X and baby boomers. And soon they will have more disposable wealth and some of it might go into Bitcoin. Let me know what do you guys think about becoming a Bitcoin millionaire. Will you be the one? Leave your thoughts in the comment section below, hit that like button and subscribe.